Good morning, everybody. Hey, welcome to Wednesday, October 21st. I hope your week's going well. Hey, yesterday we did manage to bounce off and stay green. What will today hold? Well, we got a lot of earnings coming out, a lot of household names that you're going to recognize as we get ready to talk about this week's economy. Not much coming out today in terms of macro things that Dave likes to talk about, but hey, there's earnings, there's micro stuff. We'll talk about that. I hope that you'll stay tuned in. Looking forward to our conversation with Dave next up.
Point 7 on your Mellencamp there. Hi, good morning. It's 8:38 now. I double checked the clock. I'm right this time. 22 here before 9. Yeah. Let's go downtown and find out what's going on with your money today, because I'm only partially plugged in, and I know somebody who's fully plugged in. Phillip Statler from Statler Financial Services is on the line. Let's see what's going on today. Phillip, good morning. How are you today?
Good morning, Dave. Hey, doing well halfway through the week, and I hope your week's going well too.
It certainly is. I mean, I wouldn't mind seeing a little bit less rain, but I'd also like a little bit more certainty in the market. I was searching through the ticker. We didn't talk about this before we went on the air, but Nancy Pelosi's drop-dead deadline has come and gone. I didn't see any news as to whether or not we've actually got an agreement. The Senate passed their version of a stimulus bill that nobody expects to get through the House. I hadn't heard. Have we got any hopeful news? Because we were all green yesterday at the close, which I considered good news.
Well, it is suspiciously quiet this morning. I've not seen a single headline. I did see one last night late that said that they were getting closer, but I didn't see anything that says, hey, we've come to an agreement.
Yeah, suspiciously quiet is the term. I'm glad you were wondering as well, because nothing on the headlines whatsoever, and all I was getting was hopeful news at the end of the day yesterday, and all of a sudden everybody seems to be under a gag order in Washington, which is both reassuring and scary at the same time, isn't it?
Yeah, it really is. I mean, we're not getting much out of there, but it's, the futures have been getting a little finicky this morning, because when I got up this morning, they were pretty much red. When I got to the office to start researching and stuff about 30 minutes ago, they were green, and I think they're continuing to be green right now. So I don't know. I mean, that tells me that they're not afraid of anything right now in terms of the stimulus. So I'm not sure what to think.
Yeah, with my delayed quotes, I'm still showing basically pink at the moment, but you're more up to date than I am. You've got the broker lack of delay. It's interesting. Your point taken, though. We've been all over creation this morning. News items just before we get into the earnings season meet, because there's a pile of them. The big news yesterday evening on the nightly news was the federal government wants to go to court to break up Google and sue them for antitrust. I mean, this kind of happens when you do your job too doggone well. There have been search engines coming and going over the years, but right now, when you're looking for something, even if you're not using Google, what are you doing? You're Googling it. Well, they've become just generic enough to the point where they own the market, and the federal government is disturbed by that, right?
Yeah, it's like, and it kind of like when you wanted tissue, it was automatically Kleenex, right? So,
Yeah.
I mean, we've kind of got to that same thing now, where if you want to search for something, you Google it. It's not really, it's almost become where it's not a trademark name anymore, because it is in fact what everybody uses to search for stuff. So it is interesting, though. I think what they're really looking at there, Dave, is how Google is tied into, in terms of search, is tied into their web browser. I think that's probably where we're at there.
Yeah, it's a combination of the web browser and the deals that they strike with companies like Apple to make Google the default search on your iPhone. It's easy to change, but nevertheless, you start out with a disincentive to go off of Google. And, you look at it, and you and I look at it and say, well, it's a free service. What the heck do we care? But at the same time, everything we search for ends up becoming a code word that turns into advertising server information, and that's how they make their money. And the more of us they use, the more advertising revenue they make. And with the lock-in on 80% of the cell phone market on Androids, they've got a database that it's a license to print money. So consequently, there is some concern. Whether or not it's just because they're good or because they're anti-competitive, well, we'll let the courts decide that. And that might probably be a 5 or 6 year process.
Yeah, it'll definitely be a long process. But you're right. That is the question. And it's one of those things that'll probably get settled in court somehow.
Absolutely. The other news item that's coming out this morning that's making a few people sit up and take notice is the PayPal people. PayPal is now taking Bitcoin. I never thought I'd see that happen. Did you?
Well, I'm not going to say I never see that happening, but that becomes as Bitcoin becomes more of a normal trading platform in terms of using to buy and sell. I can see not only PayPal, but other payment services start to pick up other types of currency.
I found it kind of an interesting concept, though. They got permission out of the state of New York as of yesterday to begin taking Bitcoin deposits and do payment transfers in Bitcoin. So now you can pay for your lawn mowing service in Bitcoin these days, which strikes me as, at the very least, Brave New World type stuff at the very least.
Well, I think, and I'm not real sure, but I'm amazed that states are starting to allow that. But I think they are because they want to be able to track it, trace it, and tax it.
I suspect that's the motivation you're reading. I mean, if it's starting to become more common, put it in the public domain where people can watch it and make tax revenue off of it. The other tidbit before we get into earnings is kind of guidance for earnings and a warning of sorts. I noticed that AMC, the big movie chain, got re-rated downward by one of the big brokerage houses, got cut from a $7 target price, which is cheaper than dirt, down to $4. That doesn't augur well for all the closings and continued difficulties in opening up the entertainment industry, does it?
No, it really doesn't. And let's face it, that movie industry, as much as you and I enjoy getting an evening out there with a date or whatever to go to the movies outside of our home, I got to think it's going to take a long time to build that back up to what it was pre-COVID.
Oh, yeah. If it isn't the shortage of new releases that aren't going straight to Netflix and the pay-per-view services, it's the fact that there's still a substantial percentage of the population that are nervous about sitting close to each other, and I kind of feel for the folks at AMC. Earnings season continues, and we got some household names that reported this morning, didn't we?
We do. We got a slew of them. It's that time of the quarter. So let's start out with Verizon. Verizon had a pretty good quarter. They beat by 3 cents a share. Revenue was basically in line with expectations. Now, bottom line is they had an increase in subscribers for their phones, a bigger base than what was anticipated. They actually raised their 4-year guidance a little bit, but I was looking at them, year over year, they are down. That's one of the things that doesn't really show up when we rely on analysts to give us the beat or miss. They're not looking at last year. They're looking at what they think they're going to make this year. So most companies are not doing as well overall as they did last year. They're just managed to beat out what the analyst expectations were. And that's the way Verizon is today. So they're trading up about 0.8% this morning before we get going. And so that's interesting to me. And then we got AutoNation.
I was just saying, I was kind of curious about what Verizon's guidance looked like, because that's the first time that Apple has ever tied in at least since the first iPhones came out, Apple ever tied in with one of their phone suppliers as being part of their big debut of a new phone. I thought maybe Verizon might have some real flowery language.
Nah, not in a little bit of a report I got. They just expect an increase in the bottom on their bottom line number. Earnings for the full year. So AutoNation, the auto retailer, huge network of auto dealerships. They had a really good quarter. They beat by well over 50, about 60 cents a share, a little bit more. Revenue was above forecast. AutoNation stepped back in and has increased their share repurchase authorization to 500 million, and so that's helping their stock this morning. They're up 6.25%, and they will open, at least right now, they'd open at a new 52-week high.
Wow. So much for the tight economy, right?
Well, yeah, I got to tell you, there have been some incentives, but in some dealerships, there's not much in the way. Some brands, there's not much way in incentives. So, yeah, it's one of those things that kind of catches you by surprise a little bit. Now, this one doesn't catch me by surprise, and that's Winnebago. Winnebago, you and I have talked since COVID. This recreational vehicle industry and marketplace has just gone booming. They have been a benefactor of this situation, and they beat by again a little over 50 cents a share. Their revenue was above forecast. They're encouraged by, I don't know why they say improving outdoor recreational trends. I mean, it's already been a trend through the whole COVID thing, and so they were trading up. Let's see where we are. Yep, they're trading up 1.7% this morning before we get started. So that's and I expect that from them. To me, that industry is going to be interesting a year and a half from now, right? When we've got a vaccine and COVID's under control, what's the resale market going to look like in the RV industry?
Either that, or we get people hooked on the notion of not being hotels, and the hospitality industry will continue to tank.
Well, that's true too, but I think that's a year from now. We need to have that discussion and look at that and see what it looks like.
Absolutely.
So then we've got NASDAQ. That's the index, the brokerage house, or the trading floor of the NASDAQ, which isn't really a floor; it's all electronic. But they beat by 7 cents a share, helped by a jump, obviously, in trading volume, and they were. Let's see, I lost it here.
I was going to say, they don't show up on my big winners and losers list this morning. I've always found it amusing that, when you say buy the stock market, you can actually buy the stock market and buy a share in NASDAQ, right?
You can buy the New York Stock Exchange is another one, but NASDAQ's trading up 1.5% this morning.
Cool. Got time for one or two more here. What other high points you see?
So I got two of interest. One good, one not so good. So let's we want to finish with something good. So let's start with the not so good. Netflix, household name. I think most everybody I know has Netflix, and their earnings was a disappointment. They missed by about 40 cents a share. Their revenue though was above what the forecast was. So they're feeling some pressure by weakening subscribers. It's the worst. I think it said, I don't know if it says the worst, but the weakest subscriber growth in 4 years. So that's significant for them, and because subscribers are what's going to grow their bottom line. They're trading down today.
I was going to say, you do the Disney Plus, the Hulu, the Apple TV, the Fubo, and all the rest of the suppliers. You can only grow like a weed so long, and eventually everybody that's going to want you's got you, don't you?
Well, yeah, that's right. And you got to start making choices, right? So they're trading down 4.75%. I know I still have Netflix, but I have cut a couple of my streaming services because I just wasn't using them enough to justify them. I got rid of Disney Plus because we just weren't watching it. So I think that's one of the things with those services, that you can take them and or leave them. If you need them, you can go subscribe, and you get tired of whatever they got, you can discontinue. So that's kind of nice.
Eventually, these services are going to start contract deals in order to stabilize things out. What do you bet?
They may, or they'll offer obviously a lower price, right, for a contract versus a come and go. So the last one I have for you is Snap. Snap, is that app, Snapchat type thing that's out there.
Mhm.
They actually made a profit, Dave.
Wow.
It wasn't much, but it was 1 cent a share. They made 1 cent a share, which was 6 cents better than expected. They're expected to lose 5 cents a share. So that was good. Revenue top forecast. They had a stronger than expected growth in users. And so those things have helped them. And I know they don't show up on any kind of winner list, but they're up
Huh?
almost 23% today. They will open at a new 52-week high of almost $35 a share.
Wow. Expect Google to buy him out for about $20 billion tomorrow morning. And all, could
Yeah, I
happen.
tell you, it
You
could.
never
It
know.
could. No doubt.
Green Day yesterday on Wall Street. We've been saying it's kind of all over the pond this morning. Phillip, how we do it 45 minutes before we open?
Hey, you know what? We are green, not like deep green, but we are at least green. We got the Dow up less than 0.1%. We've got the S&P 500 a tad over 0.1%. Seems to be the theme today. And then we got the NASDAQ up a little bit over 0.1%. So, but everything's green right now. And hopefully it will open and close that way today would be a great thing. Hey, on the commodity side, Dave, we've got silver up 1.5%, gold trending up 0.7%. Crude oil is up big time from where it was yesterday when you and I talked, but it is down 1.1% from where it closed yesterday at $41.22 a barrel.
But over 41 is good news. The overseas markets, Asia was all green ink at the end of the day when they closed early this morning. Europe's kind of off a little bit this morning. I think they think our politicians are full of hooey and they're a little bit more pessimistic about our stimulus. Phillip, stability counts, retirement profitability counts. Help me figure out how to make my retirement work for me. How do I find you?
Dave, now's a great time. You're supposed to get a physical every year. Get your financial physical now, starting with our financial x-ray. Give us a call at 863-382-0037. You can go to my website, statlerfinancial.com. There's a link there where you can schedule a 15-minute phone call, or you can schedule a whole financial x-ray there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
All righty, and back here again tomorrow morning on Light FM. Phillip, thank you so much. You have a wonderful day, all right?
All right, Dave, you too.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Wait and
Hey, folks, again, I want to thank you for joining us today. I hope that your day is off to a great start. Remember, get your financial x-ray now. Give me a call. Get on the schedule, 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.